Welcome back to the YouTube homework channel. In this video, we're going to go through homeworks for chapter 12, Intangible Assets. We have two problems for this chapter, one for patent and the other for goodwill. First question, patent. Okay, so the company basically spent a lot of money on a patent. Okay, these are the expenditure. So let's take a look. Through 2009 to 2011, they did some research that the cost was $400,000. Then, the beginning of 2012, the company paid engineers and lawyers to prepare patent applications, and they got patent. Total cost $300,000. Okay, then 2014, legal fees paid to successfully defend the patent cost $49,900. And then April 2015, they did some research again, $55,000. And then finally, July 1st, 2019, they have legal fees paid, but unfortunately unsuccessfully defended their patent, $34,000. Alright, so these are their expenditures, and we're going to calculate the carrying value of this patent for three different time points: 2012, 2016, 2019. Okay, so let's do that. For 2019, 2012, by the end of 2012, what is the carrying value of this patent? So let's take a look at first. How about the $400,000 research did on the patent? Because this is R&D, so the $400,000 will not be capitalized. Okay, then how about the $300,000 spent on January the 1st, 2012, right? Yes, this will be capitalized. So this is January the 1st, 2012. We're going to capitalize $300,000 and nothing else for 2012. Therefore, by the beginning of 2012, we're going to capitalize, we're going to debit patent, $300,000, and credit cash. And we need to also amortize this patent. For the year of 2012. Okay, so for the year of 2012, we're going to amortize this patent. The useful years, 20 years. So we can amortize this patent by 20 years, and it's going to give us the annual amortization, $15,000. So we can amortize $15,000 for this patent. So by the end of the year, our carrying value of this patent will be $285,000. Okay. Then we're going to move on. 2013, 2014, nothing happened until the end of 2014. So we will continue the $15,000 amortization for the year of 2013 and 2014. So by the end of 2014, our carrying value of this patent should be $255,000. Okay, then we paid $49,900 to defend this patent, and we won. Okay, so we're going to capitalize the legal fees because we successfully defended our patent. Therefore, by the end of 2014, we should have, if you add them together, we should have carrying value for this patent $304,900. Okay, Then we're going to move on for 2015. What happened? 2015, we did some research, but again, it's an R&D expenditure. We're not going to capitalize it. 2016, uh, 2016. It's again, it's nothing happened, right? And 2017, nothing happened, and then so the second question, what is the carrying value by the end of 2016? That's pretty easy to do. So we're going to amortize this for the year of 2015 and 2016. We're going to get carrying value. So because we revised the carrying value, we're going to calculate the new amortization because the numerator has changed. So the new carrying value divided by the remaining useful life, which is original 20, we already amortized 1, 2, 3, 3 years. Okay, so we're going to calculate our new amortization expense. We're going to amortize $17,935 for 2015, and then the same amount for 2016. Okay, then by the end of 2016, we're going to get our carrying value for this pattern. Okay, then let's check. Anything happened? On January the 1st, 2017, it is revised, right? It revised its useful life estimate down to 6 remaining years, okay? So in 2017, the carrying values, right? We start with this carrying value, but we're going to work on the new useful life. So we're going to calculate the amortization for 2017, 2018, and 2019. Okay, and the new annual amortization will be $44,838. Okay, from 2017, 18, and 19. So it's not that difficult to answer the question C, right? What is the carrying value for 2019? All right, this is the first problems. Okay. Then we go to the second one, the goodwill. So let's take a look at question. So July the 31st, the company paid $4.2 million acquiring common stock of the target company, and these are the information about the target company. The balance sheet. It was determined that, right, the fair value of identifiable net assets will be $2.85 million. All right, so based on these numbers, we should be able to calculate what is the goodwill recorded in this transaction, because we know the goodwill is the difference between the price paid to acquire the companies and the fair value of the net identifiable assets, right? We have both numbers. All right. So to answer question A, what is a goodwill recognized? Right, equals my paid amount minus the fair value of identifiable assets. $1.35 million goodwill recognized. And you can check how we're going to record a journal entry for that, but that's not required. We're going to calculate that amount. That's enough. Then question B, determine the impairment loss. So what happened? Let's read the question. What happened is over the next 6 months, okay, the new purchase division didn't work well. We lost some money, from that division. So very likely something went wrong. So we need to consider whether the goodwill has been impaired or not, because their acquisition didn't work out like the way it should be. So let's check. We have the information. By the end of 2019, we have information about the division. Net assets, $1.8 million. And it's determined that fair value of the division is $1.85 million. Okay? So the question B, determine whether we have impairment loss or not. Remember, how to determine whether a goodwill is impaired or not? We're going to adopt a unit perspective. We're going to look at the whole division, because its fair value of the division, $1.85 million, is greater than the carrying value or the book value of the division, which is $1.8 million. So there's no impairment. Okay? No impairment has occurred in the year 2019. So we do nothing. So part 3, assume that fair value of the division now is $1.6 million instead of the $1.85 million. Then very likely we do have an impairment now. So let's calculate what is my impairment for goodwill. Alright, so let's figure out, because the fair value of the whole division is $1.6 million now. Okay? Which is fair value of whole division is fair value of all the assets except for goodwill plus goodwill. All net assets excluding goodwill, right, plus goodwill. Together, $1.6 million. Then we're going to just find out what is my fair value of net assets excluding goodwill. We will get my fair value for my goodwill, right? So let's find out what is the fair value of net assets excluding goodwill. So I'm having a net assets $1.8 million, which this number include goodwill. So we're going to minus the goodwill, which is 1.35, which is just calculate that from there, right? $1.35 million. And in addition to that, right, the net assets excluding goodwill increased by $350,000 because the value increased. So the fair value of net assets other than goodwill is going to be, this is going to give us $800,000. So fair value, which is all net assets excluding goodwill plus goodwill, minus fair value of net assets excluding goodwill. is going to give us, right? This is implied goodwill fair value. The implied goodwill fair value is $800,000. Where currently our book value $1.35 million. Obviously, we need to write the goodwill value down to $800,000, and it's going to give us $550,000 loss. So impairment loss is going to be $550,000. Okay, that's all we have for chapter 12. All right, and see you next time.